All right, so welcome to lesson 2 of week 3, and we are moving into some things that are going to help you understand this technical analysis more than ever before. I believe that the last lesson about support and resistance was a very detailed one, and we are just taking it a step further. So today we are going to be talking about trend lines and channels. Trend lines and channels. So today we are diving into one of the most powerful tools in technical analysis, which is trend lines and channels, because this is going to help you as a trader to visually understand market directions, predict price movements, and also spot high probability trading opportunities. Since all we are doing is to speculate the market in order to be able to find out where we can get more opportunities and risk some to get more, this tool will help you a lot. So by the end of this lesson, you will know how to, number one, draw accurate trend lines to identify market direction. Number two, use trend lines to spot entry and exit point. And lastly, to understand price channels and trade within them. Without any further ado, let us dive right into it. So the first lesson is under this one is what are trend lines, right? I was explaining this to one of my mentees as well over the weekend, and there was an illustration that I use generally to explain this that I really like. Let me just impute that before we continue what we have in the notes. So if you are climbing through a staircase, the architectural design of that staircase as like a construction that keeps the cases in line, so to say, because they are not just suspended in the building, they have something holding them together. So when you are climbing up the stairs, you have this support. I already said it. You have the support underneath, right? And when you are climbing down, it's almost the same thing, right? So let us see how we can understand trend line by using a staircase as an example. All right. So you need to understand that a trend line is a diagonal line drawn on a chart to connect price point and show the direction of the market. We had already established earlier that the market can be going up, which you call uptrend or being bullish, or the market can be going down, which you call the downtrend or bearish. So in these main situations, number one, for the uptrend, a line drawn under price connecting higher lows. Look at this illustration I have on the drawing here. You can see I wrote something HH and HL, and you can see that the market is what? Going up. That HH means higher high and the HL means higher low. Why? Because this low is higher than this. Let me pick my demonstration 2. Higher high, higher low, because this low is higher than this low, right? And higher high here, this high is higher than this high. Whenever you see the market in this formation, you know that the market is trending upward. Basically, that is what it means. It means that the market is trending upward and is in a bullish trend. In this case, we draw our trend line underneath price like this because it shows areas where the price had interaction and they all align in a straight line. Let us see if we can see an example like that on this Euro USD chart. I will look at here this region as a trend. Why? Because practically I could see that the market is making some higher high, higher low, higher high, higher low, higher high, higher low, higher high, in that manner. Let me bring that line out of there so that you're able to analyze it. So if I have that, basically I need my mouse now. Basically, if I bring that out, this is how it looks like for the line I drew in that structure. And if I put a trend line here, I could put a trend line like this. I remember whenever we are drawing any of this line, it does not always meet perfectly accurate. It should just have a zone. right? So this is how a trend line is being drawn. So on the price, I can have a trend line drawn like this on that price. All right, let us continue. And an example of uptrend, an example of uptrend is if price is making higher highs, that is HH, or higher lows, HL, the market is in an uptrend. Therefore, you are going to draw a trend line. A trend line is drawn below price to act as support. So when we're in uptrend, we draw the trend line to act as a support. That is that on that. Let us move to the second one, which is the downtrend. But for a downtrend, aka bearish, going down, a line drawn above price connecting lower lows. What does that mean? Look at this that I drew here going down. You can see here that this structure is the opposite of this one. But in this case, the market is making what we call lower high, lower low, lower high, lower low, lower high, lower low. What does that mean? It means that this high is lower than this previous high, likewise all of these ones, therefore making a bearish structure, meaning a downtrend structure. And where do we draw our trend line? In this case, we draw it above price. And why is that? We draw it above price because if price is making lower lows and lower high and lower lows, the market is in downtrend. A trend line is drawn above price to act as a resistance. Take a pause while you're watching this and compare these two. In a uptrend, the trend line acts as a support. In a downtrend, the trend line acts as a resistance. All right, let us look at the Euro USD chart we are using as an example to see cases where we can see the same type of structure to explain these things practically. The more you train your eyes, the more you begin to see these things as they play out in the market. All right, so check this out. My internet just went off while recording this, so it's making the chart to act up. I think it should be restored shortly. I don't want this to interrupt my recording anyways. All right, so we have this structure. While we wait for that to be restored, just look at here. This is high and this is low. Whenever the market make that move, another word that we use to call it is the swing. We call it swing, right? So the market swing low here, and when it tried to come back, it went here and then went here and then came here and then went down, came here, went down. So we can see from here down here, the market is making what we call what? Opposite of what we had earlier here is what the market is making. I'm trying to get my tools to work, but just give me a sec while I turn on my mobile Wi-Fi. All right, please continue as we have there. Oh, I don't like this. This is not cute at all. Anyways, all right, it's coming up. Please find my phone. Please find my phone. Find it, find it, find it. I need to buy a router. Why this home Wi-Fi keeps going off and on? Yes, that's my phone right there. Please connect, connect, connect. Thank you very much. Think we are back live now. Great. All right. Sorry, I had to fix my internet. So here we are. So here we can see the market moving down here, went up here, came down here, went up here, swing down here, went up here, right? Just to pick some points, right? And if I should drag that out for us to analyze, we can see what we have here in this manner. And where will I draw my trend line? I'm going to draw my trend line, if not from here down. Yeah, that's a perfect one. So you can see where my trend line is. Can bring that on the price. You're going to see how it looks on the price like this. Not really perfect, but I already told you about areas, right? So that's a trend line. That's how we identify trend lines, just like I illustrated in this diagram right here. All right, so let's move on to the next thing. I think that is very well explanatory for you to understand what trend lines are. So let's see how to draw trend lines accurately. Steps to draw trend line. Number one, find at least two or more swing points. You know what I mean by swing. When the market moves from high to low, that leg is called a swing, whether up or down, right? Swing low or swing highs. So you find two areas that has this point, like this swing, this reverse, another swing, right? Then connect the point with a straight diagonal line, just like this line that we have had here. I can identify this swing and I can identify this swing. I can connect my line like that, right? And if it is at the bottom, I can see this swing low right here. I can see another swing low right here. I can connect that too. If I see another one in that direction, I can connect that three, just like that. Here too, if I look, this one is out of proportion. I could pick those two. I could pick these two, depending on my preference. The more you practice these things, the more you get more accurate at them. And then when you connect the points with a straight diagonal line, the last thing is that the more times price touches the line, the stronger the trend line is. All right, this is a strong one than me looking for this one, because I could have also connected just here and here, just these two together. I could have just connected these two, right? But when this price printed more functions for me, I could see clearly that these three were stronger, right? One, two, three. All right. So these are key rule that you should know when you are drawing trend lines. Don't force a trend line to fit. The price constantly breaks through. If price constantly breaks through the line, adjust it or ignore it, because some lines are not just. So let's say, for example, before all of this happened, I was connecting these two and price came and broke it like it didn't even exist. I won't force it. I'll just leave it until I see a clear trend line that looks more accurate for me to be able to work with per price. All right, so let's move on to the next one, which is the trading with trend lines. We, of course, you know, when it comes to trading, by now, if you don't know this, then maybe I failed. You know that Trading is buy and sell. So let's see the scenarios where we are buying in the trend line or we are selling. So we buy in an uptrend and we sell in a downtrend. I cannot overemphasize this enough. Like I said in lesson 1 of week 3, when the market is in an uptrend, I don't have business looking to sell except I'm looking for trouble. It is better that I follow the trend. The trend is like a river flowing in a direction, and I will swim better by just swimming in the direction of the river straight forward, right? So when the market is trending up, I am buying. When it's selling, going down, I am selling. So in the case where the market is an uptrend and I'm trying to buy, price bounces off the uptrend line, then I will start looking for buying opportunities. Then I'll put my stop loss below the trend line to manage risk. Let's see a practical example. So in this scenario where the price is going up and going up, if I'm going to buy, I want to join this uptrend because I'm already seeing it showing pattern. Because this low did not take out this low, we'll still learn about entry strategies. All right, I'm going to be buying here when the market came back to the trend line, and I will likely put my stop loss below this last low so that I can make opportunity off all of this leg up, which is going to be a lot of profit for me. And in cases where I'm trying to sell in a downtrend, price bounces off the trend line, then I'm looking for selling opportunities, and my stop loss will not be below right now. It's going to be above the trend line. So let's see here. When the market came, let's say I took this second this trend line like this. When the market came, reverse, and showing me structure, immediately bounces off here, I am going to be looking to sell and put my stop loss above this last swing high for me to catch this opportunity, take my profit and leave. When we learn about entry opportunities, you are going to see even much more. All right, so let's move on to the next one. As you know, this episode is about trend lines and channels. So let's move on to channels. So what are channels? A channel is a price range where the market moves between two parallel trend lines, one supporting price and the other acting as resistance. So instead of having only one line drawn, they are having the two of them, one at the base and one on top. That is what makes it a channel. It's just like when river flows, you know, it flows in channel, where we have banks where the river does not pass here and the river does not exit the other side of things. So we have three type of them. We have the ascending channel, which is the bullish, where price moves upward between two parallel lines. We have the descending channel, which is the bearish, where price moves downward between two parallel lines. And as well, we now have the horizontal channel, or what we call the consolidation, where price is not making new high or visible lows, but just seems to be stuck in between prices, right? Price moves between two horizontal lines. What I have drawn here is an example of an illustration of an ascending channel. And how do you now identify ascending channels? Number one, you want to identify an existing trend line, or whether it is trending up or down. You identify one. I have a practical one drawn here on the Euro USD chart, or the one we just cited. So I already identified that price is in a trend here. I already drew my lines on them, and instead of drawing just one, I have that as an ascending channel. And the second thing is that after you have drawn and connected the swing lows and the swing high, you are able to find the support and resistance and then take action. So after we have that drawn, how do we now trade it? Let's quickly look at some of the examples on how to trade them. So you buy near channel support and you sell near channel resistance. checking if my recording is still going on. Right. So, but I've been telling us that we do not take actions and buy and sell and buy and sell, but some people use the channel for it. But this is not what I will encourage you to use the channel for. The number two, if price breaks out of the channel, it signals a potential trend reversal. The channel to me is more useful as a reversal and a confirmation for an entry. So for example, the market failed to come and join this place again, one, breaks out of this trend, two, indicating or suggesting to me that market might want to change from this uptrend that we have had in a while, right? And that helps me to see that even more clearly. And last thing is, you ought to always confirm with other indicators like candlestick pattern or volume before entering a trade. So a channel can also help us. For example, here, remember when we add candlestick pattern, remember this. What is this called? Let me help you. This is called an engulfing candle, and in this case it is a bullish engulfing candle, indicating that the market might want to push up. And this will really help, because if the market had been making this move, comes down here and gives me this signal, it might show that this is going up. So we can use that as indicators. Remember, in this lesson I am just exposing you to some of these things. Watch the video all over again to gain some more understanding, but don't stress yourself out. Write the questions down. We'll go through them together in our live lesson. So let us talk about some common mistakes that you should avoid when you are drawing your trend line or trying to trade with trend lines. Number one mistake to avoid is forcing trend lines to fit the chart. Only draw trend lines that the price respect multiple lines. In fact, I would suggest that they touch your line like 3 times or more times for more stronger trend lines. Then the second mistake to avoid is ignoring trend confirmations. Always wait for at least 2 or 3 touches before trusting a trend line. And lastly, trading against the trend. I have always warned against this. Is it still recording? Yes. I have always warned against this. And how to fix that is follow the dominant trend. If it's up, focus on buying. If it's down, focus on selling. And lastly, practical exercise. I want you to open your Euro USD chart. Identify the market. If the market is trending, you could get a note or use your notepad on your phone for this. Write the pair down. Write trend, uptrend or downtrend, or if the market is ranging, just put ranging. Secondly, draw a trend line connecting light is dead or continue regardless. Draw a trend line connecting higher lows or lower highs. You already know how to do that from what I've shown you in the lesson today. And if possible, draw a parallel channel to track price movement. You know what a channel is, drawing the 2 instead of drawing 1. And I already made a video on how to draw that on your MetaTrader 5 on your phone. All right, I might need to make another video on how to use TradingView on your laptop. Let me know if you would want us to do that now or later. All right, these are your take home for this episode of week 3. Trend line shows the market direction or act as support or resistance. Number 1. 2. Price channels helps traders spot entry and exit point. 3. Trade in the direction of trend for higher success rates. And lastly, use multiple touches to confirm trend lines and avoid forcing them. That will be all for this part of our lesson for week 3. Write down your questions or send them an email in case you forget, and I will see you in the next one. Cheers.